Hi, everyone. Thank you, Jane. So I'm fine, Ingmar. Good morning. Nothing is visible. Okay. Everyone could see the NASDAQ.
I can see it. Morning.
Hey, how are you, Stell?
I'm very well, thank you.
Good, buddy. You sound loud and clear and all charged up from a nice little vacation.
Yep.
I feel. Oh, go ahead, bro.
No, I just
All
said
right.
yes.
Oh, all right, everyone. I want to welcome all our viewers from investing.com. It's going to be a rough day in the market, big gap, lower opening. I just want to go over a little bit about what I was thinking after the Fed yesterday. And after the Fed, we had cable rallying. It had traded 128 earlier, came off, and then we had one more push up in cable. So I know that you guys, just like me, at times have you know, you have to make a choice. You don't want to just get short every currency if you're looking for a bounce in the dollar. So I just want to show you a little tip. So um, there were a few reasons I went with cable. First of all, it reached Grega's target. So I've been waiting for it. Plus, I had all kinds of divergences, like a little 1, 2, 3 up here. But the real reason that I chose getting short cable over euro was this candle. Everyone see this candle right here? See the color on the close? So here's the same candle in euro. Okay, so I'm sitting here and I'm going, which is a more bearish candle? I'll be like your eye doctor. This candle or this candle? So it was as simple as going with the red candle. And they're similar, except this was closing okay, where this was closing kind of lousy. An outside candle with a lower close. That was my trade selection. So good for 150 pips right here. Also, the other was my bias in Euro Pound. So the way Euro Pound was acting, I thought that we could make another run up towards here. So, in American Idol and all these singing competitions, I use this analog that you could have a great voice and be a good singer, but if you choose the wrong song and it doesn't fit you, you're going to have a poor performance. And in our business, it's trade selection. Like you could have known that there was going to be a dollar bounce yesterday, but if you went with the euro, I'm not saying it's a bad trade from 14.20, right? But the trade selection, and if your trade selection is good, you know what's even more important? If you're shorting something that's showing weakness, that even if your timing is off, it's going to be more forgiving than if you're shorting something that has more relative strength and you're early. Okay, so that's the game here is trade selection. So you could have been bullish a dollar, but it was important to select the right one. So the two paydays for the dollar bounce was pound and Aussie. Aussie as well, diverging pretty dramatically, but point wise, it was cable. So do I think it could continue? Sure, it could continue. I know a lot of people are talking about this 95-60 level. Raksha was a friend of mine. Scott was. I got a tweet from Shy Girl who said at least for a day trade between 96 and 560. Good call by Tracy. Uh, Ben. Ben talked about the dollar yesterday. That I don't recall. Okay, so anyway, there were a lot of people talking about this area. Then I look at this, and on the daily, it's 88.6 back here. So we'll see if we could put in a higher low. We're still lower on the week with 2 days left. To trade higher on the week, we need 96.95. That's still a good pop from here. So we'll see. Congratulations. You're an excellent trader, Pete. How do I get in your hedge fund? Send me an email. What strategy do I use? Raksha was a friend of mine. Nice, Pete. I know you're looking for that. So yeah, S&Ps. We are getting a reversal week in S&Ps. Pretty ugly. Here we are. We're back towards the megaphone line. To me, 3100 is pretty important. So we're almost there. You have to say though, ugly week, right? So we'll see. This could be the. I'm not in the camp looking for this. You know, a lot of people are looking for a flush, and you know, I'm not against it. But I would be mainly just looking for this to be a correction, and I'll have to redo the fibs. But best guess is, you know, that we test these lows again. Here's your 200 week, maybe 2,700. Still a big trade from here. You did well. You thought 1,800. Andrew who? Shepard. Andrew who? Andrew's pitchfork? Is Andrew's pitchfork here? Raise your hand, but don't stab me.
He's in the toilet.
We have it's Steve. Will you bring Andrew's pitchfork to your commentary today? I know you use them. And
I
anyway,
use them only in long-term charts. You know, when you have a clear trend, they're quite useful to show you extremes.
Yeah, I trade with my hands. I don't like silverware. Anyway, so Blake, how are you, buddy? What do you think post-Fed? I wonder if he's here.
Okay, I was trying to hit the unmute button, and I don't know why it wasn't working.
How are you, buddy?
Good morning.
Good morning.
Good,
Post-Fed.
good.
Post-Fed, what's
Post-Fed.
Pipsar thinking here?
So what did do you know? Do you know why the market is under a little bit of pressure right now?
I'm guessing COVID cases going higher, but I'm probably wrong.
Well, no. I think post-Fed is as soon as the
Fed's,
that
he will never. He's not even thinking of ever again for the rest of eternity raising rates.
That's definitely one. So you got you got the Fed that really was, I mean, obviously supportive of markets, but very downbeat. And the soon as he yelled, or as soon as he said, we are discussing yield curve control, and that is topic of discussion. The market's just buckled under pressure right at that point. So, but yeah, and he was. I mean, when you're like, look, rates aren't going up ever. He didn't necessarily say that, but when you're that downbeat, the market did come under a little bit of pressure. And as soon as he said we are discussing yield curve control, that also really weighed on markets. One of the things that
they always try that though, don't they? Yield curve control?
No, I think Japan does it. There are other central banks that do it. And the thing is as you expand your balance sheet, and we are expanding our balance sheet, and we're going to continue to expand our balance sheet, you have to, or you have a bankrupt government, right? Yeah. So you have to control the yield curve on the shorter end, especially because you don't want to have balloon payments. So, this is a way of us saying, look, we're going to continue to print unlimited amount of money, and bonds are going to continue. They'll never go down again, I guess, right? I guess that's
Yeah.
that's the thing.
With one caveat, Blake,
What's that?
that the dollar eventually will force them to rethink this equation. They'll never want to do it, but how do you fight,
Capital outflows.
capital outflows and a trust dollar? It isn't happening yet. I don't think it's going to happen immediately.
Yeah.
But how long will the market take to realize that once you print to infinity, there has to be a reflection on the value of something that has unlimited supply?
Yeah, I know because you can only push we're the reserve currency envelope so far, and right
Yes.
now we are, and right now that's what the Fed is doing. It's like, look, we're going to just continue to print, and because we are the reserve currency, but when or if the market comes to its senses, has a reckoning moment where they're like, why should we own dollars anymore? That will be a problem. As of right now, we as the Federal Reserve, meaning we, are blatantly taking advantage of this benefit that we have. But at the same time, it's like you have to take a step back and say, well, if the Fed did not do what it's doing right now, would global capital markets be under pressure? Right, because it's a house of cards. So and we are part of the house of cards, but the house of cards is a global house of cards. It's not just the U.S. equity markets. It also has to do with the rest of the world too. So right, I mean,
yeah, it's just a matter of degree, but yes, undoubtedly.
Yeah, exactly. Okay, so but Coach, you said something earlier that when I was listening in, you were talking about trade selection, right?
Yeah.
And you said, you picked the cable, which for really great reasons. And let me just give you a quick analysis of what I'm looking at. First of all, we hit the 78% retracement, 127% extension, and almost this downtrend line. Greg's pip hit to a T. It was perfect setup for a short. And then you said, you could have picked something else crappier like the euro dollar, right?
Well, it was mainly because of the candle after the Fed, where you had a green candle.
No.
Oh, okay.
You said it because it was my chart of the day, and said, "Oh, but you could have just you could have said you could have chose this piece of garbage like the euro dollar," which is I'm joking.
Yeah,
but
Blake,
this was
you're my contrarian indicator.
No. It's funny because I did purposely do this. Do I think that the euro could come under pressure? Yeah, I think the euro will eventually come under pressure. Do I think there's better trades out there? Absolutely, I think there's better trades out there. If you're a Forex Analytics subscriber, the better trade out there is the Aussie, or as Dale put up, the cable. And and then your question might be that you're listening in right now. Well, Blake, why didn't you pick the Aussie dollar as your chart of the day? Because I reserved that specifically for Forex Analytics subscribers. I mean, if you were a Forex Analytics subscriber and you were in the chat room and you were with me yesterday when we were trading at 70.20, and I'm like, I'm going to start shorting some Aussie up here, then you took advantage of that. So the blog, if you're out reading the blog and you're getting the chart of the day, you're going to get, I try to post something there, throughout the course of the week, every day. But yeah, I mean, if you want, what we're doing all the time, you have to be a Forex Analytics subscriber. So anyway, it is all about trade selection. Do I think the euro is going to continue to come down? I do. I actually think that we rejected this big trend line. It's a big confluence, but one of the reasons why the euro is being supported right now is because you can see the euro Aussie, euro New Zealand pairs are actually starting to rally, and this is actually a pretty big deal, because if you get the euro like I'm going to go back to the Euro Aussie. You go back to the Euro Aussie here. If we get back above this 200-day moving average, which is also channel resistance, you know, we get back above 165, 160, 65, 60, 50, which is about another 100 pips away from where we're currently at. You get above that, then we're going to really start squeezing. So the euro might come down as we're in this down channel against the Euro Aussie. You know, the Aussie, I think, is also going to continue to break lower because we have not only do we have a false breakout, but we also have a double top. So in case you guys missed that.
That looked like the VIX chart, only the VIX chart looks a little stronger, but almost the same type of structure.
Oh, the Euro Aussie?
Yeah.
That would make sense. It would be an actual correlation.
off.
I'll look at it here in just a second.
Sure.
But I just want to point out the Aussie, we had this false break above 70, 30. When we did the false break yesterday post FOMC, that was our indication that it was, you know, going to come down. Now, if we breach 69 cents, or, you know, and it's, I shouldn't say breach 69 cents. We can get below 69 cents. But if we break below 69 cents on a closing basis, then that points to 67.75. But that also would break us through this uptrend line too, which, you know, you got to think about this. If we breach this uptrend line, then now you've broken your uptrend. Now you want to sell rallies. So, but that's what the Aussie looks like right now, and it does look bearish. And as equities stay, as they stay heavy, the Aussie should, you know, continue to underperform. Sorry, guys, I didn't mean to yawn there, but it's, you know, it's what happens when you get up at 3-ish in the morning. You had mentioned, Dale, about the VIX, and let's go to the Euro Aussie, and I'm going to go to a chart that is not so drawn on. Let's delete that. Here's the Euro Aussie, and if you compare that, and let's overlay the VIX. Yeah, you're going to see.
Look at that.
There you go, right?
Yeah. The VIX is a little stronger because Euro Aussie got down to its base.
Another proof that this is one of the best risk proxies, as we've been saying for a long time.
Yeah, I mean, this is just it's something that, you know, we've looked at for since the financial since pre GFC. This has been one of the strongest correlations out there. That's why when you hear us in the chat rooms, when we're saying, okay, hey, watch the Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand, it's very closely correlated with risk aversion. And so as it ticks up, the volatility would naturally tick higher as well. So yeah, I mean, you know, it's of course Dale's eagle eye that can snuff that out. So so yeah,
that's cool.
Yeah, it's a pretty strong correlation. Okay, so going back to,
thanks, Blake.
Oh, you're welcome. You're welcome. So here's the cable, and the cable is this is pretty key support right now. I think if you are shorting the cable, you look right here. This is 126.20 roughly. I think, you know, you start breaking through there, and then that's when you get the you know, sell off, you know, this type of price action, you know, that type of price action from here, because then you're making lower, you know, lower lows at that point, and then you can see then it's clearly a false breakout above this resistance, right? Whoop, not that one. I'm trying to grab the trend line here. This one. So it's clearly a false breakout then, and you are now making lower lows. So that's how I would be approaching the cable moving forward. Another double top that's setting up is the Kiwi, and the Kiwi is actually trading right at the neckline right now. You know, the Kiwi breaks down, and you know, we're looking at, oops, sorry, that's my office. And you can see actually it's touching right now, and the Aussie's trying to break right now as well. So Yeah, continued downside pressure. One of the other observations from here is pay close attention to gold. Gold is trading like a risk asset right now, and and it has been for a while. But I'm sure there's some point that gold will firm up if things get a little scary out of control. But right now, and one of the things that we've been observing here at Forex Analytics is that we're in a pretty big range, and I think this range is well, here I'll just read you what it says on Forex Analytics so you guys can see what we've been saying. Is we are holding the 666 level, which is the 78% retracement, but realistically, we seem to be consolidating between 1650 and 1750 near term. 1750. And I think the overnight high was 1740. And this is a couple of days ago. And then there's, 1660. So, we're just kind of range bound here. But as of right now, yeah, it is trading with a little bit of with risk assets for the time being. But I think that would change if we get down towards 1650. One of the other pairs that I think you should be looking at right now is Aussie Yen. We have a head and shoulder pattern in the Aussie Yen. It's trying to play out. And matter of fact, if again, if you use Forex Analytics, there's the update for the Aussie Yen about an hour ago was that we had a head and shoulder pattern, and we were just sitting at the neckline, and now it's starting to bleed lower. Since then, and that target now is 72. So the Aussie Yen continues to look weak. The Aussie has now broken 69 cents. And I think that the Aussie dollar, this double top here now points to 67.70. So we'll see if we can close below the 69 cents. I think that's a bearish event. So I wanted to see if Steve and Stelios are here, because I know we're bringing in Andre as well today.
They're not here.
Good morning. Leave a message.
Morning, guys.
Yeah, after the beep. Beep.
Hello, everyone.
Hey, Andre.
Hello.
Hey, Andre is here. Well,
I'm here
I don't
already.
want to.
Yes.
I don't want to take it, because I know we have between a guest and between Steve and Andre, I know we've got a lot to say. So I want to thank everybody for being part of the Forex Analytics family. For those of you that support us, for those of you that are on the fence, make sure you try us out. It's only $1 for 10 days. So give it a whirl, download the mobile app, get in the chat rooms, see how you like it. Doesn't matter what version you're using, whether it's premium or light, you'll still get the premium version while you're trying it out for 10 days. But I'm going to pass it over to you guys so we can give an opportunity for Andre to speak today. So thanks, Coach. Thanks, Steve, Stelios, Andre. Good luck today.
Thank you, Blake.
Great review,
Blake.
Blake.
Thanks, guys.
Okay, perhaps we talk for a few minutes. Steve, we go through the numbers, and then
Absolutely, Stelio.
then Andre and you. We can take it from there. So it's good to be back, by the way.
Nice to have you back.
Yes.
Great to have you back.
Yeah, great, like a tiger, Frosty the tiger.
Great.
So we're seeing this risk-off move today after the Fed, even though Powell didn't really say anything groundbreaking. Rates are going to be low for longer, and initial discussions to control the yield curve, a la Bank of Japan. The markets suddenly, I don't know, they didn't like what they heard, but I think.
First of all, Stelio, let's start from the economic realizations. I mean, one of the ridiculous arguments for this rally, and I'm calling it a ridiculous argument because we had talked many times about how the market was priced in for perfection coming into 2020. So no matter what kind of a rebound we get out of this mess, considering what the market was pricing in when the year was starting, being where it currently is, considering what has happened in between, is just ridiculous. So anyhow, one of the ridiculous premises was that the V-shaped recovery is going to bring back everything to what it was like within 3 months. But look at the assumptions the Fed made. They assume, and we know that their assumptions are always on the optimistic side, right? That unemployment is going to be 6.5% in 1.5 years from today, which is double of what it was.
Yeah.
So, just by looking at their assumptions, the Fed explicitly says, there is not going to be a V-shaped recovery that will bring us back to where we were just in a period of few months. And second of all, I think being so dovish, scared the markets, because when Powell says in advance that no matter what happens within the next 1.5 years, there's not even going to be a consideration about, tightening or whatever, that makes people think like, okay, how bad are things? You know what I mean?
I personally, I don't know if that was it, because Fed fund futures were pricing nothing anyway for the next 2 years. So I don't think that's what spooked the market. Maybe it was, but I think the one of the things that we are getting now, yesterday and today already, is that it looks like in some places of the world we're getting another spike in COVID, which is very unfortunate. But I was reading today about Texas. I think they had the largest number of new cases since this whole outbreak started in one day.
That is very true.
Crazy.
But we've had this trend showing up during the past 4 or 5 days, and the market until Powell yesterday was just adding that to the list of things it was ignoring.
Yeah, true. It was a bit numb. We're just waiting for Powell to see if he can do something. I mean, I don't know. So unfortunately, it looks like this COVID thing is far from over. We still have more flare-ups and more cases in many parts of the world, Greece included. We used to have a handful of cases every day, 3, 4, 5. Now we had like 90 over 3 days, which is not a huge number, but it's a big advance. So I'm very worried about it. I hope I'm wrong, but I think going into September, October, it might get worse. And how can the global economy face a second wave, or second closure? Because you'll need to go into lockdown again. There's no way you can't. I don't know. If they don't go into lockdown again, then the numbers are just gonna explode. So I think the market, like you correctly said, it was pricing a lot of good things. We've been saying this on this webinar for days and days. It's way too much priced in terms of good scenarios, and we have to deliver now. And look what's happening. Already there's doubt. So I still think there's a leg lower in equities, and I think it's starting now. How
Most
much
likely
lower?
it's starting. I mean, it's already quite a dreadful day. I think the market did a magnificent job squeezing shorts. I mean, very few of them probably had the capacity to stay on. So it is extremely likely.
And the other thing I was saying for days now, I think the turning point for equities is going to be when there's nobody left to buy. Everybody's long. And look, there was we read about Robinhood traders who are just piling in newbies who don't know what to do. Oh, hey, people are making money buying call options, so I'm going to do that. I saw this chart today. I don't know if I put it on the chat room, which has the Google searches for day trading and for call options.
Yeah, which has exploded higher.
3 times higher than the long-term average. When everybody tries to get into something, it reminds me of Bitcoin at 20,000. So I'm not saying equities are going to crash, 70% like in 2009, but I think another pretty good correction is coming.
I think there is a floor for stocks because I think we've seen enough evidence to say with absolute confidence that if they need a different mandate to directly start buying stocks, they're going to do it within a matter of days.
Yes, absolutely. Okay, we have numbers in about 15
Yeah,
seconds.
that's why I've brought up data flash. 15
Yes.
seconds left.
Ziggy
We have
says, by the way,
PPI.
states like Texas are underreporting the cases to try to keep the economy going. That's, I don't know that for sure, but yeah, it's very likely. So, okay, let's
And
have a look.
initial jobless claims. Let's see. Any second now. So PPI stronger than expected. Initial jobless claims more or less, not more or less,
In line.
basically exactly in line. 1.5 more million. We're talking about people, and the continuous jobless claims at 21 million, which is actually 1 million higher than expected.
Yeah. I mean, these numbers are very volatile, so I think those are in line. We can classify them as being in line. So, yeah. So my main fear is, like we said before, for second wave, and that could be catastrophic. It really could. So, let's hope that the countries haven't been too hasty in opening up again. They do this to try to protect the economy, but if you do this too quickly and then it starts again, you're hurting the economy a lot more than if you would just stay locked down for another 2 or 3 months. But
what's worrisome here in the States, except for the East Coast and New York, still, we never ended the first wave.
Yeah.
You know what I mean?
Yeah, there are areas that actually never, in essence,
they're making new
high.
Making new highs in cases. So we really never had the end of the first wave. Maybe New York did in a few states, but the U.S. overall never had that dip for us to have.
And imagine if the situation doesn't de-escalate by September, when the weather starts getting worse.
Yeah,
that's going to be ugly to end the year. Assuming that there is also not going to be
it
a
was
vaccine.
10 times the magnitude second wave 100 years ago. So all you have to do is multiply what happened.
Needless to say, the market is pricing in none of that, right?
Yeah,
absolutely none of that.
We'd be at 1800.
I mean, it's not only pricing in that, it's like, because keep in mind that the market can always price in a possibility partially, right? So, current valuations of the market is like there is 0% chance of a second wave, and there is a 100% chance of an immediate recovery back to where things were. Now, you don't need to be like a specialist and a guru economist or whatever else to realize that with the market pricing in that, the risks are clearly tilted to the downside. Now, the only counter argument to that, which I'm not saying it's negligible, quite the opposite, the only counter argument to that is that the ability of central banks to support the assets bubble is extreme and can reach any level. But I think people with market experience know that nothing is absolute. I mean, are central banks very strong? Do they have a big saying in the markets? Have they in essence nationalized many of the markets? Yeah, all that is true. But are they able to completely make the market decouple even from the worst economic reality? Not really. So, as you said, if we have a second wave coming, if they have to even partially go in lockdown again, I don't think there's going to be much the Fed or any Fed can do for stocks not to at least, go towards the previous lows at the very least.
And,
of course,
and Powell has said that himself.
Yeah, in essence, he has. He has said that.
He has said that. So
yeah.
So he's got cover.
Yeah, exactly.
On the other hand, having said all that, the equity markets do not reflect economic fundamentals anymore. So that's
no, they don't.
Argument.
They don't. They're very far away from it. Yeah.
At the end of the day,
go ahead.
Sorry, I was just going to say you have 5 big stocks pushing an index, and 50 other stocks dropping. At the end of the day, when you have unemployment, millions of unemployed people, companies or small and medium companies going bust, it has to at some point get reflected in equity indices, even though 4 or 5 stocks are really pushing it higher.
So Steve, throw all of that into a bowl and mix it all up. And does that make you think that this is going to be more of a correction of the recent correction rather than another bear move under the
It
March
is very
low.
hard putting your money that you're going to see like lower lows
Yeah,
because of what we just said before, because
Right.
we know that this is not a fair game. This is not a
So
market anymore, right?
it's controlled. So what do you think? They could control it down to about 2,700 S&P?
I think that the first step we are now seeing for the S&P attempting to break through this channel. Once that happens,
Oh, you have
20
2,800.
2950 to 2980 is the first logical area of support.
Yeah.
Below that, we will be looking for 2800, then 2730. One step
Yeah.
at a time. So far,
Yeah.
it's moving as expected. I expected the rebound to, to get rejected earlier. But as I had said, my risk tolerance was for not seeing a close above 3260. 3226 was equality of wave 1 to wave 5, so that was perfect in respect to that. Nasdaq is a little bit lagging in reversing. I mean, we do see a big reversal today, no question about it, but the previous 2 days that the S&P was not advancing, the Nasdaq was actually advancing. We had this overthrow from this ascending wedge, but as I was saying yesterday, overthrows don't really worry me because they're very, very frequent in wedges. I have a full position in the S&P. I have 3/4 of a position in the Nasdaq. I'm still out of the money, but if this is indeed a reversal within a couple of days, I should be in the money, and I'm going to be putting stops in place if we close at the lows today, because if this is not the reversal, then I don't want to stick longer with it.
And crude had a nice failing rally yesterday, Steve.
It did.
We didn't
It
make
did.
new highs.
Having to do with the VIX, the VIX gapped above this descending wedge today. A daily close above it is going to be the confirmation we needed. We had already been saying in advance for a couple of weeks that, pay attention. The VIX is not playing ball with stocks just, moving higher, and the VIX is looking like it's printing, a bottoming formation here. So, we get a daily close above this descending wedge. I think it's the confirmation we need, and I don't really see much of a resistance until we get to the 45, 48 area. So, that's the best case scenario. DAX, beautiful rejection after
we talked about buying calls in the VIX yesterday.
Yeah, a little overthrow. FTSE, I drew that in the FTSE a long time ago that I expected one more leg higher.
You showed it early in the week, bouncing against the upper wedge.
Yeah.
Man, there's a lot of good stuff that comes out of this free room, don't you think?
That's true. That's true.
So, if any of this stuff is helping you guys, why don't you plant a good seed? And the best way to say thank you is sign up today. Anyone going to do that? I'm telling you that it's good karma. If you're always out there trying to get things for free, no one's going to want to pay you. Just telling you that. All right, Steve, go ahead.
Here's
look, okay. Fast Lane, is Joe Perry in the house?
So
okay,
Australian,
Mike's coming back. Go ahead.
Australian stocks, same deal. So as you see, we are seeing the first evidence of a potential reversal here. I'm also in the S&P. I forgot to mention one more thing. I'm also monitoring this ascending trend line support in the RSI. Let me make it in an intermittent line. We're also testing this at the same time. So we're testing support both on the chart, having to do with this trend line, this channel's trend line support. We're also testing this RSI trend line support. So, they're probably going to be both breaking the downside. Clearly, and we had warned in advance about that, with stocks turning lower, the dollar is getting bid. So there's no surprise there. For the time being, it's manifesting mostly, of course, in commodity currencies. We had said multiple times, be careful, commodity currencies are overdone. And since the risk is overdone, when they turn lower, they're going to turn lower together. We gave the example of USD NOK, USD CAD, USD SEK, Aussie USD, Kiwi, Aussie Yen, Kiwi Yen. So needless to say, and without having to go through all these markets, because I want to give the ability to Andre to also show us a few charts. Here's the Aussie getting rejected. Pay attention to the channel. Here's the Kiwi getting rejected. Here's the Aussie yen that got rejected from the previous high already in like 3 trading days. It's moved substantially given the fact that it's an FX pair. Here's the Kiwi that first overthrew a little bit this ascending channel, but is now getting rejected. Here's the USD CAD. We said in advance that there it is, perfectly touched my target, the 78.6, perfectly in the spike we had yesterday, and now it's rebounding higher. Here's USD NOK, quite a nice move from there. Here's the USD SEK, same deal, you know, so on and so forth. So bottom line, big possibility that we're seeing the beginning of a reversal. Now, the big question, the $1 million question before I pass it to Andre is, okay, they are reversing. How far can they move? You know, we have to let price action tell us what it wants to do now. Is this a corrective pullback? Keep in mind that even if this is a corrective pullback, I mean, given the fact that we had advanced substantially, you know, even a corrective move lower can be very, very decent. So it doesn't mean it's going to be like a 2-day move, right? Or it doesn't mean that it's going to be like a 5% move lower if we're talking about stocks. It can be substantially higher than that. So we'll have to start watching the price action, see how it unfolds. So then we can make good plans about how we want to resume from there. Meaning, do we want to be pushing the risk-off side of the market, or we want to be looking for opportunities to buy irrespective of what the fundamentals tell us? Because we said, unfortunately, because that's a loss for everybody in the long term, the market has decoupled in a big extent from fundamentals. But this is the market we have. This is the market we have to trade. Okay, Andre, are you still
Hello,
here, mate?
everyone.
Hey.
Yeah, I'm still here, and thank you
Good.
very much once again. Can you confirm my audio? It's in perfect conditions.
It's perfect. Yeah. We can hear you loud and clear.
Cool.
By the way,
so
there is somebody asking about USD-MXN. Let me cover that as well because I wanted to and I forgot.
Sure.
Clearly, the USD-MXN, as you see, we knew that. I mean, it's one of the very good risk proxies, along with Euro Aussie, Euro Kiwi. But I'm not going to go over them because Blake already showed them. Clearly, the USD-MXN is showing, you know, great appreciation. I mean, the pace is quite nice. I would be watching this 22 area support from this point on. If we get to retest it, I think at least temporarily is going to be a buying opportunity. And in general, if you see exotic currencies the last few days, they were rallying against the dollar. Guess what? Obviously, as long as risk is under pressure, these moves are going to be reversing, you know, along with risk moving to the downside. So, Andre, why don't I stop sharing the screen so you can grab the screen yourself?
Let me try to. Oops. Can you? Okay. Screen.
There you go.
Okay, dollar versus Mexican peso. Is that correct? Okay, it's perfect when we are all synced at Forex Analytics, and this is the proof that even on a free service like here, the webinar that we make every day, we can make money. But when we are all synced at the same time at the Forex Analytics in our analysis, it's beautiful to see things starting to work. So I will start to show you some things that you are already familiar with, because Dale already mentioned it. Blake also reinforcing that idea, and now Steve also reinforcing that same those same possibilities. So for euro versus dollar, we are trading the bearish pattern. I published that chart before. I was expecting that pattern to form at 88% Fibonacci, so I'm expecting now a retracement. So we never know if the price will actually retrace to those default targets or default price zones for those patterns, but that's the expectation we need to assume. So as soon as the pattern forms, we assume the price will retrace. So 111.22.
Is your
111.22, it's my first target, 38% fib, eventually a retest of the previous weekly fractal weekly resistance. So the previous structural resistance, if the price decides to push a few points below. So, but the default target, which actually I use to define my risk, so I never enter the market to lose more than what I expect to win. So that being said, that's as an example, we have a situation like a one-to-one risk reward at the first target. So then later, if the market decides to rally to the second target, we will maximize our profits. But that's my first target is always the target that I use to define also my maximum loss for a specific setup. So this is a 12-hour time frame or a daily time frame, if you wish. So I'm expecting a pullback for euro versus dollar. Also, the dollar, actually the Australian dollar versus dollar, we are also facing the monthly fractal. So we are facing the previous structure highs and the 127 extension, as Blake has mentioned it, and also a lower time frame technical double top. So basically, I have default projections for that technical double top at 68.09. So it's not too much from here, but it's what it is. It's a default projection for that pattern. Eventually, if the price decides to, let's say, to violate this structure trend line, let me try to point that structure here. This structure trend line and eventually this major ascending structure, the channel, if the price violates this zone, eventually we'll see more bearish momentum for the Australian dollar, and eventually a retest of the daily, the previous daily fractal resistance at 66.16, and the weekly resistance right below. So I will not be surprised to see if the price decides to violate this 68.09 zone, we will see more bearish momentum for the pair. Also, the Kiwi, I published this chart. Actually, I can push a few of those for our subscribers to see the chart that I published before at Forex Analytics. So this is actually, I published this 4 hours time frame chart, this cup and handle formation. We have the pattern right above the cup and handle, reinforcing the idea for more upside momentum. So then later I published I projected this bearish BAT pattern, or actually the bearish alt BAT pattern at 65.77. So we are now trading that. We are now trading that price zone. Actually, the market has nailed that Fibonacci level, as you can see, the 113% fib. Also reinforcing that level with a kind of a double top. So we are triggering that pattern. So I will not be surprised to start with a retest of the previous support level, and then the default target for the alt BAT pattern. So this may be one of the nice setups that we have at our disposal at this point, a retest of the weekly fractal that corresponds nothing more to almost a 5% fall for the Kiwi, a retest of the previous structure, actually a retest of the cup and handle formation. So Australian dollar versus New Zealand, another one that I always remember Dale when I push these setups. Basically, this was the third drive that I was expecting. So I was expecting that bearish scrap pattern to form right at that monthly fractal resistance at 108.65. So this is the 113% Fibonacci extension. So actually the 161.8 extension, and the completion point for that bearish crab pattern. So it finished with the help of or from these third drive, and actually the market has reacted very well from there. So I still expect more downside momentum for the Australian dollar versus the New Zealand, at least 105. And the stocks. Let me show you one specific chart that I want to, the DAX. And this is a weekly time frame chart. So I've been following this chart for quite long. I actually, one of the first charts that I published here at Forex Analytics was this actually, I believe it was this crab pattern at 168 extension. Then the market has developed into this technical double top and the head and shoulders, the bullish crab extended below. Actually, the 200% Fibonacci extension from the head and shoulders being reached at that point. We have also a lower degree or a lower time frame 3 drives pattern there, I believe, and then a retest of the previous structure highs and the failure of the actually a false breakout above these previous structure highs, and later and then I projected this also at Forex Analytics 8100, the 168 extension forcing a bounce from this now monthly support. What we have at this point for the DAX, and eventually it will reply on S&P, eventually not with the same proportion, but eventually they will share the same momentum at least. We are threatening this previous structure. Let me give you a price. So we are threatening the 1288. So this was also the previous next zone for this top, this technical double top. So we are now threatening the next zone of that pattern. We are threatening the shoulders of the major edge and shoulders formation, and we are now threatening the previous and the most recent previous structure support. So I published this chart before showing some eventual pressure at this price zone. So we are already trading a few points below from these levels, actually almost 5% below this structure. And we need to go into a lower time frame to try to understand what we are seeing at this point. So basically, we are threatening, or we are trading very close to the 88% Fibonacci retracement. So this is the completion point for the default bearish bat pattern. I'm not saying the price will complete the pattern. That's where the pattern gets completed. So at this point, the market has failed that completion point, but I will not be surprised with the retracement for the DAX from these levels. If that happens, I will put my coin into this level, into this 38% Fibonacci retracement, 11,036, eventually a retest of the weekly fractal 11,343. So this is my
any view on metals or crude, for example?
Yes, crude basically almost the same. Not threatening the previous structure support level. So this is a weekly time frame chart. So, but we are threatening, we are trading the 38% Fibonacci retracement. So I do expect some pressure at this point. Only the market will say if I'm right or wrong. But at this point, I will expect some pullbacks for crude oil. Just because of that, I'm not seeing anything very specific, not even in a lower time frame. There's a very sharp and clear upside momentum. We have now a close, actually, it's kind of an interesting price candle there. So let's see if a retest of the daily fractal will not be a surprise, 28, but that will be a huge, or at least
support area. Yeah, I agree with you.
Support area. Yeah. Let me finish with the metals. Yes, let me go into a weekly time frame, because I was wondering for quite a few time, looking into this chart and trying to figure out, okay, what can I see here that turns into value? And sometimes we see nothing, and we start to try to understand, and we don't understand what the price will do. So what I see at this point, and one of the possibilities that I see for the silver, and this is again, this is a weekly time frame, I see the possibility to form the inverted edge and shoulders. If well supported by the 200 moving average, even better. So at this point, I will not be surprised to see, well, let's assume those 28 bars the price took to form this eventual inverted left shoulder, the price will take a similar time to form the right shoulder. So that being said, it will take some time to form that pattern. But what I see at this point for the silver is a potential upside momentum above the monthly fractal. So basically, we need to wait for two things. One of them above 1894, so above the monthly fractal resistance, or eventually the recovery of the weekly fractal resistance at 1584. So if the price decides to recover that price or that structure, eventually you'll see more bearish momentum. And this is a weekly time frame, so that's not the prettiest image for the silver. And a lower time frame event for gold. So, and one of the charts that I published and I shared on Twitter also, the symmetries for gold, at least on this time frame, this sideways moving process, during this range between the weekly fractal and the most recent daily support below, and we have some symmetries in play here. Actually, the price feels almost the perfect symmetry recently, respecting one of the criterias, the 127 extension, which allows me then later to project this bearish cipher pattern at 78% fib. So we can see the price now being supported by the 200 moving average there. Nice support there. I was expecting that cipher to trade at least at 38% fib, so that was my expectation. So at least the price has found some. It seems the price has found some support at the 200.
Seems your daughter is getting agitated.
Yeah, it's not agitated. I have my nephew here also, so they are playing around. But I still expect that to happen. Obviously, the pattern will fail above the daily fractal at 1745. So above that level, the cipher will be no cipher anymore, and we will see a retest of the weekly fractal above. So, but at this point, I still expect at least a 38% fib, eventually a retest of 1708. The previous structure support level. I don't know if you have
somebody asked just
question?
for USD CAD, and it's quite interesting since it's reversing. So do you have any outlook?
We are trading very close to my not the target zone, but my completion point. The completion point for the.
I don't think we're going to make it there.
I don't think at this point. I think the price will reverse above this structure's resistance. Let's see. We have DXY also approaching or very close to the 88% fib. We have also Mexican peso. You showed before. We have a lower time frame bullish shark pattern. These blue lines at 1608 extension.
Also an inverted head and shoulders formation.
An inverted head and shoulders right below that Fibonacci level, reinforcing the idea for more upside momentum. So one step after another, as you said before. First step, 2293, 2338, 2383, and then the daily fractal 2441, and so on, weekly above. But that to happen step by step.
One
price decides to
one day at a time.
One day at a time. Yeah, quite an interesting charts there for at least for those who are subscribing for Xanalytics.
Any outlook? Any outlook for the cable? Another one.
Oh yes, the cable. Another one that I projected before. The price extended a few points above the 113% fib. Obviously, those who are following, you already know that I always project a crab pattern above the alt-bat pattern. So the alt-bat pattern at 113% fib. So this is my first, the first pattern there. And then if the price decides to fail Actually, the price can fill both of the patterns, trade the 38% fib and then extend it,
and then lower again,
extension, and then lower again, obviously. But at this point, 125.31 is
the first area of support.
Is the first area of support. Is the first target for the default, first target for the pattern. So basically, that's what I'm expecting for the cable.
Somebody's asking for the USD-TRY. Let me cover you in that. I already said it. As long as the risk is off, all these exotic currencies, should start suffering again. So the dollar should start appreciating against them. So be careful. I mean, they've already moved somewhat to the downside. If we're talking about like USD-TRY, it has already moved somewhat to the downside. You might see a rebound from here, given the fact that we have risk-off conditions.
Or Andre, what you can do is what I do. I just wait for Grega's targets to be achieved, and then I go the other way.
And it was beautiful because we have a pattern there. We have all the structure, we have all the symptom, and the completion and the target for Grega.
What a team!
Grega, it was very interesting to see.
Have you ever been on a better team, Andre?
No, this is my first team, and I don't.
Okay.
So Ben's fault. He's never been in a better.
He's never been on a team.
Yeah.
No one ever picked you. I mean, you guys are out there playing soccer, and they don't.
You were I played basketball. I played basketball for quite a few years.
Well,
but
then you've been on a team.
I've been on a team. Yes. Not as good as this one, but
there's no I in team. Which is why I get kicked off.
But as Jordan said, there is an I in win.
Yeah. Oh, good one, Steve. and good interview.
Absolutely.
You interviewed Andre well, and everyone is commenting on your charts, Andre. They love them.
Thank you very much.
Really
those are just patterns, and that's what I like to search for something reliable to put my money at risk. I don't like to trade randomly.
Here's
if
a
you trade
Picasso
randomly, you will fail for sure. Thank you very much. Thank you very much.
So Dave, do we have our guest here?
I had Howard Friend scheduled of Break and Retrace. Howard, are you here? I'm looking for you. If you're
just
here,
use
maybe
the
you could
chat.
Raise your hand.
Or use the chat or the Q&A if you're here.
I can share my
you
screen
don't have
now?
to yet. If you have a few more, Howard may not be.
Okay.
Okay.
Just let me know when he's here.
Paging Howard Friend, you're on deck, buddy. Okay, I'm not getting any response. It's kind of strange because he did retweet that he was going to be here. Okay,
so let me finish.
Go ahead.
Let me wrap with this the Nikkei. Also, one of the charts that I was following recently, and the eventual bearish bat pattern at 23.21. So the market has nailed that Fibonacci level.
Yeah, perfect.
And also the previous structure support zone. So I'm expecting more Nikkei upside momentum 2042. So basically we need, again, step by step, we have this ascending structure trend line support approaching from below. So breaking that support line. And we will see the 38% Fibonacci, the default target for the pattern being reached, and that may converge with some with the 200 moving average also approaching from below. I'm not sure. Let me just check the daily moving average, actually just pointing to the trend line support. Let's see how it develops, but a nice pattern forming there also, just to wrap with that. Okay, Dale, it's all yours.
Okay, we just have one more request, and since Howard's not here, would you mind showing?
Sure. No
Aki, the Swiss, US dollar Swiss.
Dollar Swiss. Well, different animal. I have different projections here. I still waiting We never know if those will form or not, but based on the criteria and the Fibonacci criteria that I have at my disposal at this point, and what I see here, we have two levels of pressure. The first one at 93.16 and the next one right below at 92.64. So major bullish bat pattern at 88% fib. And this internal, I call it an internal because it's formed inside this range below the previous structure higher high and the lower low. So it's an internal behavior pointing also to the 1608 extension, the bullish crab pattern at 93.16. So basically the CHF is not trading a completion point or a specific pressure zone. We can try to find some pressure elements there. We have this previous structure resistance there. We have
wait for your numbers.
Yeah, I prefer to wait for those if the market decides to approach those levels. If not, I will stay out. But in fact, we are trading this kind of a pivot zone between the structure resistance and support level. So I will not be surprised if all the dollar, if the dollar in general starts to gain strength. I assume dollar versus CHF will also follow that momentum without completing these patterns. But the patterns will form there a few points below, some convergence between Fibonacci levels there.
Let the markets come to you, right, Andre? Every time we try and, say, well, maybe I shouldn't wait for my target or my count. We're always better off. And if we miss it, so what?
So what?
Right?
Exactly. It's important to be here the next day. That's one thing that I need to be assured. I need to be here tomorrow. If I miss today, I need to be assured. So I can't lose my money today. So, but that being said, I need
number one trade, patience.
Yeah.
Oh, yeah, absolutely.
Patience.
Absolutely.
It's not
Someone
easy.
asked me the other day.
Eventually, one of the hardest things to control while trading is patience, because you start to see things happening, rallyings in front of you without touching your target or without touching your prices, and you want to participate, and you get emotional with your chart, and you end up in a trade that you should not be.
Yeah. Who hasn't done that, right?
Oh, absolutely.
Yeah.
I'm not saying that will happen every day, but that happens quite a few times during this process, obviously, because you don't want to miss the trade. Not all of them, no FOMO, but there will be some trade that you want to participate in, you will get involved with before you should. But that's make part of the process also.
So guys, just another example of the great work you get from the whole team, Andre's work. And, one thing I've noticed is that if anyone has a question, one of our members, and say, for example, I'm not in chat, Stelios or Steve will Skype me and ask me, someone wants to know what my weekly look is on something. You're always going to get your end, it's a service business and we're going to serve you. So we do, that does happen. If, someone's not around, they want, Greg's perspective on something he didn't cover. But all of this work is right there at your fingertips, along with the chat room to be able to interact after FACE is over. So
Adele, and selling my fish is always strange, but I know, I think you understand my point here. But it's one amazing project. It's an amazing group of people, amazing group of traders also. I can't, obviously, as I said, it's always strange to sell my own fish, but it's one amazing group of and talented group of people. And well, I believe the numbers will say per se what I
have a joke for you, Andre, that we'll end it on. What do house guests and fish, since you brought them up, have in common?
Oh, I get no point.
They start to stink. They start to stink after 2 or 3 days.
Yeah.
Huh? Yeah. Huh? You have any people coming over this weekend?
He has.
Some
His
fish?
nephew. His nephew, he said.
All right. Well, Howard, friend, I don't know what happened to you, but I'll still be your friend, even though
And I'll be your Howard.
you stood me up. So everyone, don't just count your pips, count your blessings. I hope everyone's having a good month this week. I know many of us are. Become part of our community, invest in your career. And we'll wrap it with that. Thank you, Steve and Andre, and we'll see everyone to wrap up the week. I have
Thank you, Dale.
Benny, the
Thank you very much.
E-mini. Benny runs a day trading E-mini operation, has 60,000 followers. It'll be interesting to see what he has to say tomorrow. So see everyone then. Good hunting.
See you.
See
Have
you.
a nice
See you,
weekend.
Andre. See you, Steve.
Later.
Adios.